It's 6 minutes after 1 o'clock, 1:06. Hi, everybody. George Chamberlin here. We segue right on into hour number 2 of our program today. We'll be with you until 2, so stay with us. We got a lot to talk about in this last hour or so. So stick around. Tell your friends and neighbors all about the show. We'd love to have them involved as well, as we do every Sunday from noon until 2 o'clock. You know, there's a real challenge in the world we live in today to educating and convince people that having a plan for investing, having a plan for your career is absolutely critical. A lot of people just kind of are flying by the seat of their pants these days. My guest during this segment of the program, has written a book about this, how to capitalize on the time and money that you have to create the tomorrow that you desire. The book is called Investing with Purpose, and we're joined on the program right now by Mark Aardsma. Mark, welcome to the show.
Hey, good afternoon, George. Great to be with you.
Mark, did I pronounce your last name right?
Actually, that was excellent. Congratulations. Not easy to do.
Okay, I'll take that as a good sign. This book is really kind of a story about your life and how you've learned kind of as you were on the fly with a lot of this stuff, including a pretty bumpy start. You were working in the tech industry, and all of a sudden there was a downsizing.
Yes, that's right. I can't claim that I courageously left my day job to start something new, because my day job went away, and that, looking back, so thankful that happened. That gave me the push to, instead of going back and getting another job, to start using my skills and my time to build something of my own, as far as starting a software business that turned out to go well, and that got me on my way.
You know, it's interesting you say that, Mark, because I've been through quite a few recessions over the years, and I've seen almost every time, especially in a town like we are down here in San Diego, where there is a lot of entrepreneurship, a lot of tech companies, life science companies, other companies like that, that sometimes when things look the darkest for a lot of people, and this sounds like your situation, it really is the opening of the next door in the process, right?
Yes, very true. And as I look back, like I said, I'm grateful for the nudge, or maybe it was kind of a more than a nudge, because it turned out that the rewards of building something of my own were far greater than the risk I was taking by, trying it for a month or something, which is all I had to do. I always could have gone and looked for another job. So yeah, the biggest risk really to me would have been that status quo would have been good enough, and I would have missed out on owning and building and the success that came with that, and then all the other opportunities to build other businesses, to get involved in venture investing, and to two other big things that came out of that was the growth to myself that came from being involved in more challenging and kind of adventurous activities, and also then the chance to have an impact on others. So, it all kind of started back there, and I'm just so glad that I didn't quit when there were problems, didn't quit before I started. And that's kind of part of my message to other people, is if you've got some kind of a dream or a passion or just knowing within you that you've got more potential that you're not putting to use, man, take a step. Don't necessarily take a flying leap, but take a step and start acting on that, because the rewards can be pretty amazing. Yeah,
I know a lot of entrepreneurs. My wife and daughter are serial entrepreneurs, and they've had really good success. And there are just some people that are cut out to be entrepreneurs, and others that maybe it's not the right path. What do you think it is that makes for a good entrepreneur?
That's true. That's true that it is not for everyone. And there are other ways to own what you're building and to go for what you really want, whether it's entrepreneurship or not. Mm-hmm. What I think a few of the characteristics of entrepreneurs, probably most important, is just kind of an extreme, stubborn perseverance to find a way through or around or over or under the obstacles that come along, because there's so much that has to be figured out as we go. And entrepreneurs have to have the ability to take a setback, say, okay, I didn't expect this. What are we going to do about it? And just kind of doggedly persevere. I'd say that is probably number one as far as qualities of an entrepreneur that I would say predict success, more than having the right plan on the first try.
Sure. And you know, some of the greatest companies down here, international companies, Qualcomm, came out of the entrepreneurship of a university professor who knew he had created something that was going to change the communications world, telecommunications. And I've talked with him so many times, and there were so many moments where he was just saying, I don't think this is going to work. I know it's right. I know what we're doing is right, and I know it, but it just wasn't coming together until he had that one moment, that epiphany that for him allowed him to succeed and move forward. And it would have been, he says there were many times along the path that he could have walked away from the thing.
Yeah, I love that story, and I think that that real story of entrepreneurship and success is valuable to tell, because I think sometimes people look at the end result and they say, wow, that person must have found an easier path than what I'm experiencing. I must have taken a wrong turn because this is getting awfully difficult. And I like to say, look for difficult things to do, like figure out what the hard part is about something. And if you can solve that or get good at that part, you just found something really valuable and probably marketable. Or if it's in a nonprofit setting, you just found the thing that makes the difference for the cause. So I think the easy path is a myth. It only looks easy afterwards. And in fact, sniff out some difficult challenges. That's where the good stuff is.
All right, so let's take this and segue from the entrepreneurship and talk a little bit about the guidance that you provide for people as investors. Obviously, being an entrepreneur is a pretty big investment as well, but yet at the same time, you talk about the more traditional types of investing and the lifestyle that comes with that. So talk a little bit about some of your points that you try to get across as far as being an investor.
Yes. So I think that investing as a broad concept and as kind of like a life practice or business practice is something that existed before money, before stock markets. That's the idea of intentionally using the resources that you have, whether it's time or money or skills or property, putting it to use, deciding how you're going to use it, to lead to a result that you want at a later time. And obviously that includes financial investing in stocks and savings and bonds. It also includes things like developing a career or pursuing a cause, or even, developing relationships. And so what I talk about in the book is kind of in the broadest sense, how do you discover and get to clarity on the outcomes that you want? Because I can't even have a conversation with someone with how they should allocate their resources until they can say, well, the end goal that I want is X. I want to have this impact, or I want to experience this level of success, or I want to have these people around me, or whatever it is. And then how do you use your resources to get there? So I say get clear on what you want, and I talk in the book about some ways to do that. And then understand that you don't have forever, that life is short, that windows of opportunity close, and use that time to don't say, well, hopefully someday, eventually, I'll start working towards that thing that really matters to me. Yeah. Move on it, and then take each resource, whether it's $100 or an afternoon of time or a key relationship, and say, how am I engaging this resource in a way that is moving me not just to survive another day, but to move a step closer to the things that are the most important to me. Then we get into later in the book and some of the more strategic ways to do that with money and things like that.
All right, we'll take a break here and we'll come back and talk some more with Mark. Mark Aardsma is my guest on the program. He's written a new book called Investing with Purpose. It's from the folks at Career Press. Mark, you got a website or anything that we should mention here?
Sure. The easiest one to relay over the radio is allwhoaspire.com. They go there, they can find out about the book and more about everything I've got going on.
Great. All right, we'll take a break and come back. More coming your way as we continue on News Radio 600 Kogo. It's 1:21 as we continue Money Matters. Hi, everybody. George Chamberlin here, joined on the program by Mark Aardsma. He's the author of a new book called Investing with Purpose. Capitalize on the time and money you have to create the tomorrow that you desire. Mark, I was drawn to one part of your book here because those darn millennials, and I know you're probably semi-close to being a millennial, but there's one area where you don't mention them specifically by name, but let me just read a sentence or two out of the book here. The ability to delay gratification to get more of what you want in the long term sits at the core of sound investment thinking. Investment is all about accepting less now in order to have more later. There was a survey that was done last week. I came across it. I'm drawing a blank. I can't remember who did it. But it said that while millennials have the best intentions when it comes to saving and investing, those best intentions are sabotaged by spur of the moment spending. That they have a tendency to kind of just let it go. They can't hold themselves back, and that's ultimately going to delay their success and make it a lot harder to achieve the kind of goals that they want to have, I would think.
Yeah, that's interesting. I guess there are these sort of swings in worldview or value from generation to generation. I've been told that I'm kind of fun challenged, which I think is true. I'm very future focused. So some of those people you're talking about, some of those millennials, they probably get something right that I don't about enjoying the moment. But this other side is really important too, that the future is real. It's coming.
Yeah.
And sometimes it doesn't take a whole lot of deliberate action now to make a big impact on the future. The math of financial investing works that way. Especially when you start early and you've got a lot of time. And I think other things do too, career choices or training in job skills, or even sometimes it doesn't take that big of a, for example, maybe confronting something with a work relationship or a personal relationship. A little bit of ickiness today can make a huge difference to the long term. So I definitely advocate for that. Keep your eyes open. Keep that long-term in mind and be willing to kind of bite the bullet and do the things now that might be difficult because the payoff can be huge. All
right, let's bounce through a couple of things real quick here because your observations on these things are just spot on. Debt. Debt is a four-letter word. It's not necessarily a bad word. It kind of comes down to how you use it, right?
Right. I certainly am cautionary about debt. If cash is oxygen, which it is in business and life, you've got to have enough cash to keep breathing and keep operating for another day. Debt can drown that out. And so I do caution myself in my personal path. I've used very little debt in any of the businesses that I've built. And that may have slowed me down a little, but it sure did keep me in control of my own destiny with what was happening with the companies. I don't go far as to say, you shouldn't use any debt or everyone should be debt-free. There's a place for it in business and in things like home mortgages, sure. But I would rather be earning interest than paying interest most of the time, and I think that the overuse of debt can hurt you a lot more than the underuse. So I caution about it for sure.
I like the term you use, diminishing returns. That's what happens when you get into debt, isn't it? It can literally spiral out of control.
Right. That same math that works in your favor when you're saving and investing, it's just as powerful, but in the opposite direction with debt, where a little bit of debt now can become an enormous subtraction from your future situation, just like a little saving now can become enormous addition. So I want that math working in my favor. And that means in practice, I might have to drive a car that's not as impressive as I would like, or have a smaller house, or, make sure that I'm consuming less than I'm producing, and not use debt to stretch that equation.
You've taken the concept of the millionaire next door and modernized it, is what I say about your book. I think it really does that. You kind of referenced the whole home ownership thing there a moment ago, but talk about the importance, the timeliness of when to make that decision to be a homeowner.
That's an interesting question. I guess I would come back to the fundamental math. I would play out the scenarios and put it on a spreadsheet maybe of, if I rent, what's that going to look like cost-wise in the city, in the market where I live? What does that do to my risk? Do I plan to be in this area for a long time? What is the flexibility worth? Maybe that doesn't boil down to simple advice, but I would just sort of map it out. Scenario A, rent, what do the numbers look like? Scenario B, buy, what do the numbers look like with different assumptions? Debt to own a home is one of the most sort of subsidized and optimized forms of debt. It's tax deductible.
That's right.
Are very low.
Yeah.
So it can be useful. But I think that the idea that a home is an earning asset has been pretty well debunked by the last 10 years or so. It can appreciate, but that's not a guarantee. So I definitely am not telling everybody, oh, yeah, you should go buy a home because that's going to grow your money. I would say most people have far bigger advantages in investing in their own work, or maybe a business, or their own development. And a home is a relatively modest investment at best. So probably makes sense for a lot of people, but
sure.
You're not necessarily missing the boat if you don't own one.
Well, I'll tell you one thing, in an area like where we live down here in San Diego, with rents going up 5-7% a year, it's getting very difficult to be a renter, and obviously home ownership is not right for everybody. But it's we're sure seeing a lot of people maybe even leaving the area because of not so much home prices going up that much as more rents going up at such an accelerated rate here. The book again is called Investing with Purpose. The author of the book, Mark Aardsma. Good book with a lot of good usable information in it. Give us that website again, if you would, Mark.
Yeah, it's allwhoaspire.com. That's a good place to go to find out more.
All right. Hey, thanks for taking the time to be with us on the program today. Good book.
Hey, thank you very much, George. I appreciate it.
Okay, great. All right, let's take a break here.